Morning. The committee will come to order. Last week, we heard from both the Government Accountability Office, the GAO, and the administrator of the Small Business Administration, the SBA, on troubling management challenges within the agency. What I heard led me to believe that this committee needs to fully review offices within the SBA to ensure that each one is meeting its mission. We started a series of hearings just yesterday in both full committee and subcommittees to examine various SBA offices and find ways to overcome significant deficiencies. As the President's budget is due to be released next month, it's imperative that these hearings are held to ensure our decisions about funding various programs and offices are well informed. Today's hearing will focus on the Office of Capital Access and the Office of Credit Risk Management. Access to capital continues to be challenging for small businesses, and these two offices have the competing tasks of both promoting the SBA's access to capital programs and ensuring those programs are free of waste, fraud, and abuse. In fiscal year 2015, SBA lending programs had a record year, lending roughly $23.5 billion in the 7A program and nearly $4.3 billion in the CDC program, also known as it's the Certified Development Companies or the 504 loan program. As the SBA's lending portfolio continues to grow, it will become even more vital that these two offices work together to establish clear guidance and ensure the integrity of the lending programs. As the Committee of Jurisdiction, we must ensure that we are conducting aggressive oversight and doing everything within our power to assist small businesses all across the nation. I want to thank our witnesses for being here today, and we'll be introducing you here shortly. But at this time, I'd like to yield to the ranking member, Ms. Velasquez, for her opening remarks.
Thank you, Mr. Chairman. And our small business sector has made great strides since the financial crisis. According to ADP, small firms with less than 50 employees created over 1.2 million jobs in the past year alone. However, traditional bank loans have only recovered to 85% of their pre-recession level, making the SBA's loan programs a critical component of the market. To help fill the gap, the SBA assists America's entrepreneurs and small business owners through a range of capital access programs. Today, we will be examining SBA's management of these initiatives. The 7A program is by far the largest and most active of all SBA programs. It guarantees general business loans that can be used for everything from payroll to inventory. Last year, SBA made 63,000 7A loans totaling $23.5 billion, a record for the agency. As SBA portfolios grow, it is imperative the agency has people and systems in place to conduct necessary lender oversight and protect taxpayers' interests. I will also note that lending volume on loans $150,000 or less has shrunk to 1/3 of pre-recession levels. Similarly, small dollar loans used to account for 25% of all dollars approved. Today, that figure is just 10%. It is not just about setting loan volume records, it's about ensuring the type of businesses that cannot get credit elsewhere are gaining access to SBA's program. I look forward to hearing from Administrator Mellon on this subject. While providing more capital is laudable, it didn't come without congressional intervention. 2 years in a row, we were called upon at the last minute to increase SBA 7A guarantee authority because it underestimated loan activity by 30% and 55% respectively. In response, Congress included report language in the omnibus to ensure we are kept informed of loan activity going forward to prevent the need for emergency intervention in the future. How the agency adheres to this requirement is a top priority and one I will be watching closely. Unfortunately, while the 7A program is setting records, the 504 program is struggling and has been on the decline for the past several years. In an effort to spur growth, the 504 refinancing program was recently reauthorized in the 2016 omnibus. This bipartisan accomplishment will help many businesses improve cash flow, expand operations, and hire more workers, thereby improving the communities around them. This is not to say that the 504 CDC program does not have outstanding issues. In fact, 6 GAO recommendations on program oversight remain open nearly 2 years after the report was issued. I would like to hear how they are being addressed. It is the responsibility of this committee, and one we take very seriously, to examine SBA's management practices and ensure that adequate internal controls are in place to administer the capital access programs. While more work remains to be done, I look forward to hearing from today's witnesses on their plans to address this outstanding issue. With that, Mr. Chairman, I yield back.
Thank you very much. Gentlelady yields back, and I'd ask that any committee members who may have opening statements submit them for the record. And I'll take just a moment to explain the rules here on the lighting system, but you're probably both familiar with it, but we operate under the 5-minute rule. You'll each have 5 minutes to testify, and we'll ask questions for 5 minutes. And there's a lighting system. The green light will let you know it'll be on for 4 minutes. The yellow light will come on when you got a minute to wrap up. The red light will come on, and we'd ask you to complete by the time the red light comes on, if at all possible. I may give you a little leeway, but not a whole lot, so try to stay within those parameters if you wouldn't mind. And I'll now introduce brief introductions for 2 witnesses here this morning. Our first witness is Anne Marie Mellom, who is the Associate Administrator of Capital Access within the Office of Capital Access at the SBA, the Small Business Administration. We appreciate you being with us today. And our second witness will be Linda Rushi, who is the Director of the Office of Credit Management, also at the Small Business Administration. We welcome you both here and look forward to your testimony. And Ms. Mellom, you're recognized for 5 minutes.
Thank you, Chairman Shabbat and Ranking Member Velasquez. Thank you so much for giving me the opportunity to testify today before this committee. As the Associate Administrator for Capital Access, I am responsible for the SBA's loan and surety bond guarantee programs, which consist of the 7A, the 504, the microloan, and the surety bond programs. As a former community banker who relied on these tools for many years, I've seen firsthand how these programs help support small businesses and working families across America. My time at SBA has only deepened my respect for the programs and their direct impact. At SBA, we view our role as one of filling an unmet need in the lending marketplace. The goal is to help small businesses access credit when a conventional loan is otherwise unavailable due to insufficient collateral or equity, startup status, or a host of other credit challenges. Administrator Contreras-Sweet has asked my office to focus on ways to streamline and modernize our programs, recruit new lending partners, increase our service to minorities and underserved markets, and develop policies that are in line with the experience of small businesses in today's economy. Last year, as both the chairman and the ranking member have noted, our flagship 7A program approved over $23.5 billion in gross loans, a record loan volume in SBA's history. However, there is still much work that needs to be done. I want to extend my gratitude to this committee for leading Congress in providing additional authorization to meet this marketplace need in 2015. SBA's growth in small dollars, or loans of $150,000 or less, is also worth highlighting. Studies show that nearly 90% of business loan applications are for these small loans, and with gaps in the lending marketplace, many of the nation's underserved small businesses often rely upon higher-cost alternatives. Under the administrator's leadership, SBA has actively encouraged lenders to expand access to these loans, and I'm pleased to report that since last year, small dollar loans have increased by 22%. SBA's commitment to underserved lending is also evident in our recent extension of the Community Advantage pilot program. Created in 2012, lenders participating in Community Advantage are required to make at least 60% of these loans in underserved markets. SBA's microloan program completed a rule change effective July 2015 that for the first time allows microloans to be made to individuals on parole and probation. This new rule aligns with White House and interagency initiatives to make capital available to credit-ready individuals in some of our hardest-to-reach communities. Last year, we launched SBA One, an end-to-end modernization of 7A loan programs accounting platform. Its goal is to make doing business with the government easier by reducing the cost, time, and uncertainty in submitting a loan guarantee application. SBA One incorporates electronic signatures to complete documentation, interactive online decisioning logic to determine a small business's eligibility for a loan guarantee, as well as auto-populated forms to reduce redundant processing. We've consulted our lending partners in developing and refining SBA One. We've enrolled hundreds of lenders to use the system, and we've reviewed over 1,000 loans via SBA One since its launch. We continue to encourage small business growth by encouraging new lenders to join our program. Currently, a little more than 1/3 of the nation's banks are active participants in SBA's lending programs. Despite recruiting many lenders since 2014, there is opportunity for better coverage by increasing this participation level. We continue to clarify and simplify our rules and standard operating procedures for our lending programs without adding additional financial risk. For the 504 Development Company Loan Program, we are working hard since the passage of the 16 Omnibus to implement 504 Refi. And finally, we continue to improve the oversight function for SBA's loan programs, which will be addressed in more detail by my colleague Linda Ruschi, who is the Director of the Office of Credit Risk Management. We must keep these programs relevant and cost-effective for lenders. For both programs in 2016, we've returned to zero subsidy. That's a huge win for the taxpayer. I'm confident with the continued support of this committee, SBA will continue to improve its service to America's small businesses, which will result in more jobs and economic growth. Thank you.
Thank you very much. Ms. Ruschi, you're recognized for 5 minutes.
Thank you, Chairman Chabot and Ranking Member Velazquez, for the opportunity to be here today and testify before the committee regarding the Office of Credit Risk Management at SBA. As the Director of OCRM, I am responsible for the oversight and risk management of SBA's lenders and loan guarantee portfolios of the 7A and the 504 Development Company loan programs. I have spent the better part of 2 decades in this activity, lender oversight and loan program risk management, first from the Kansas City Review Branch and for the last 2 years here in Washington. SBA's Administrator Contreras Sweet is a leader in championing small business lending while maintaining prudent credit standards in our loan programs. SBA is particularly interested in balancing the growing credit needs of America's small businesses with prudent lending, always ensuring that we are meeting the requirements of our mission in accordance with the Small Business Act. SBA's role is to fill an unmet need in the marketplace to help credit-worthy small businesses access credit when a conventional loan is not available. SBA also is critical in providing credit to underserved markets. As of September 30, 2015, we monitored a 7A loan portfolio in excess of $70 billion and approximately $26 billion in 504 debenture guarantees. We monitored all 7A lenders and CDCs using our Loan and Lender Monitoring System, what we call LLMS, which tracks the monthly performance of all 7A and 504 loans and assigns a quarterly risk rating to each loan. OCRM also updated our methodology for oversight of the SBA operations of federally regulated 7A lenders and of CDCs this past year. These methodologies feature a composite risk measurement and a scoring guide known as PARIS for the 7A program and SMART for the CDC or 504 program. Benchmarks of historical and projected performance have been developed for PARIS and SMART and provide relative measures of lenders' financial risk specific to each program. By using both predictive and historical performance measures, OCRM obtains a holistic picture of lender risk upon which we then consider additional oversight activities as needed. Other accomplishments in 2015 include conducting over 1,200 assessments to renew delegated authority for our 7A and 504 or CDCs, completion of over 145 corrective action assessments from previous review activities, and approval of our 100th Community Advantage lender. Turning to supervision and enforcement, OCRM issued 6 increased supervision actions to 7A lenders and CDCs this past year for failure to follow loan program requirements, and debarred or suspended over 30 agents or representatives from conducting further business with SBA. In fiscal year 2016, OCRM will continue to conduct a portfolio diagnostic of every lender using historical performance, predictive credit scores, and the Paris and SMART methodologies. OCRM will also continue to monitor lenders through programmatic risk-based reviews. In 2016, OCRM plans to conduct in-depth analysis using our SBA loan database to investigate existing risk, identify developing risk areas, and to inform program changes under consideration. And SBA also continues in active discussions with primary federal regulators on such topics as information sharing and vendor management. Through exchange of information, we can bring improved oversight and monitoring to both our activities and theirs, minimizing duplication. I thank you for the opportunity to share this information. I'll be happy to respond to any questions.
We thank you very much for your testimony also, and now we'll turn to the committee, and I'll begin with myself here, recognized for 5 minutes. Ms. Melman, let me start with you. Last year, Congress had to act very quickly when the 7A program reached its lending cap to ensure that small businesses would be able to continue receiving loans from that important program. What are ways that the SBA is currently managing the 7A program to ensure that this doesn't occur, or if it does occur, that Congress is notified in a more timely manner so that we don't bump up against literally the program closing down and a lot of small businesses. I'm sure a lot of us, especially the ranking member and myself, got a lot of calls from constituents all over the country who were afraid the program was going to end, and Congress, for a change, got its act together and worked with the administration, and the House and Senate actually worked together and in conjunction with the SBA. But we'd like to avoid that if at all possible next time, so we'd like to hear how we can avoid that from happening.
Yes, we'd like to avoid that as well, because that was unsettling the end of the year last year. One of the things, we watch those numbers every single day, and we didn't really have a formal mechanism last year. We started talking, I think, informally with members here probably 6 months before the end of the year. This year, as you know, you've asked us, and we're working on the first report, we will be reporting to you the numbers each quarter. So far, we're looking like we're within our need for 2016, but we will work with you and report those numbers every quarter and work together to ensure that we don't have kind of a last-minute fire drill. We would like to avoid that as well.
Good. Yeah, I think we should be working together on this to make sure it doesn't happen again. Ultimately, it got taken care of, but
Mr. Chairman, may I ask a question
I'll yield
related to this?
I will yield to the
So how much 7A capital is the SBA estimating it will provide on FY 2016?
I think our estimation for this year is $26.5 billion, which is what we have in the 16 omnibus.
Mm-hmm. Okay. Thank you.
Thank you for
for
reclaiming my time. Last year, Congress took a good idea from the SBA regarding waiving upfront fees on express loans to veterans. Are there other SBA initiatives underway within your offices that you think the committee should be aware of, which could bolster access to capital for small firms across the country? If you'd like to take that again.
This year, we're continuing with our no fees on loans under $150,000. That's no fees to lenders and no fees to borrowers. We know that those small loans, as the ranking member pointed out, really do serve the underserved markets the best. We have higher percentages in all the underserved markets in the smaller loans, so we're trying to keep making those loans attractive for lenders to make. They're very costly for lenders to make, so we work hard to make those loans attractive. We also have a smaller fee on veterans loans over $350,000. which was in addition to the act that you provided us late last year for veterans fees under $350,000.
I thank you. As you know, we had the GAO did a report, and we had a couple hearings on this last week. And you know, I brought up the point that we've seen the IRS and OPM and the State Department, even the White House hacked recently within the last year or so. And according to the report, there were some concerns about how the SBA is protecting the sensitive information, which they certainly have access to. A lot of stuff the business community, small businesses wouldn't want to be out there to either their competitors or the Chinese or anybody else. So could you tell us how quickly you intend to improve in that area?
Well, I appreciate that question, because one of the big accomplishments of last year was that we managed to get all the loan systems onto a new platform that has passed total muster with our auditor, which audited the system. It's also been tested and viewed by all the major banks that interface with us. So the loan system is on a new system. It's not on the system that had been criticized in the past in GAO audits. We're very excited about that. We feel not that we're not continuing to monitor it and looking at what we need to do to make sure that we have as tight of security as possible. But that system got totally migrated onto a new system this last year.
Let me squeeze one more question. I'm almost out of time here. One challenge we've heard repeatedly is that the SBA's loan process takes too long, that people literally give up. What are you doing to modernize the program? You know, we've heard the computer systems don't talk to each other, and it's been pretty much a mess, frankly. You really need to step up on that. What action are you involved in at this time to improve that?
Chairman Chabot, I love that question, because I'm a former banker. All my life I was in lending. My last job, I was a CEO of a bank that really was a business bank in Oregon. And I loved having the SBA tools in my toolbox, but even my little bank got to the point where it was tough for us to ask for an SBA guarantee on a small loan because of the process. And that's one of the reasons why I accepted this assignment, was because I wanted to make sure that the SBA loans can be processed in a cost-effective way by lenders. So we're attacking it in a number of ways. One is modernization through technology. We've talked about SBA One. It's a platform that allows lenders to apply for a guarantee in an interactive interface online. It's kind of like a TurboTax. It's an online iterative approach. It also helps therefore with eligibility issues, and you don't have to go to the 300-page SOP to find the solution. A lot of that is right built into the system. The other thing that we're doing, that we're working on all the time, and we've got a couple major initiatives going on right now, is simplifying and clarifying our requirements. We're working hard on clarifying our affiliation and our franchise rules, for example, as we speak. So both in terms of technology and in terms of simplifying and streamlining our process, those are the things that I feel like I spend 99% of my time on.
Thank you. My time has expired, but I would just urge you to do everything possible to reduce the amount of time that it actually takes a small business to get through the system, because it's one of the largest areas of complaint I hear as chair of the committee. I'm sure my colleagues do too. I'll now recognize the ranking member for 5 minutes.
Thank you. So, Ms. Mellon, the system that you said that it passed muster in terms of loan processing is SBA One?
SBA One is on that same platform, but it also, I mean, that SBA One is the thing that's new with SBA One is that's the interface with the lender. The accounting system behind that, which keeps track of our guarantee on every single loan, wherever it is the fiscal transfer agent system. And that system, that entire system, has been moved to the new platform.
So you're telling us today that you are in a better path compared to LMA's AS past decade experience of
Yes.
delays and cost overruns and questionable results. You're saying that we are in a better...
Yes, and it was a huge accomplishment. It was really an initiative that took several years.
Okay, so let's talk about last week's GAO report to us. And Mr. Bill Shear talked about the 504 loan program. In 2014, GAO pointed out to some recommendations. 2 years later, those recommendations are still open. And so can you explain to us why those recommendations are still open?
The only recommendation that I'm aware of regarding the 504 program is still open, and keeping in mind that it takes time sometimes when we complete a recommendation for them then to get back to us and agree that we've completed it. But the one that I'm aware of that is still open has to do with economic, what is that, the requirements for CDCs to invest in economic development in their communities. And we have just issued a notice to get public feedback on how we do that requirement, how we're going to meet that requirement. So we are on the path to complete that GAO
Have
audit
you met
response.
with GAO to discuss ways to close those recommendations?
My team has met with them recently. I've met with them, but it's been probably 6 months since I've personally met with them. But my team meets with them, and our team meets in OCA every other week and talks about, completing the GAO audit items. We actually completed a whole bunch of them last year. I've been here for 2 years, and we have completed more GAO audit items than we have created. And that's my goal, is to get them responded to and handled.
In response to GAO's recommendation that the SBA conduct more program evaluations, SBA said that it is currently restricted from collecting data on small businesses from resource partners, or does not have adequate information collection system, making evaluations difficult. Can you elaborate on that?
That's something I'm going to have to look into, Ranking Member Velasquez. I'm not aware of that particular issue, but I will get back to you on it.
Because if that is the case, then you need to tell us how can we improve your ability to collect data so that you could perform the type of evaluation that are important.
I agree, and I'll get back to you on that.
Thank you. Director Roshi, in its March 2014 report, GAO stated that the SBA had planned to implement its new SMART process for assessing the CDC program by June 1st, 2014. Has SMART been fully implemented, and have you conducted any analysis of its impact today?
Thank you so much for that question, because I am pleased to tell you that, yes, SMART is fully implemented. We are conducting assessments of CDCs in accordance with those protocols. We issued a notice in August of this year to formalize that to all individuals. We have not conducted a formal assessment of the results of SMART itself, but we are conducting oversight and further management activities with CDCs relative to the results of the SMART reviews, which allow us both on-site and off-site capability to interact with them and keep costs low while activities efficient.
Thank you. Are you back?
The gentlelady yields back. The gentlelady from California, Ms. Chu, who is the ranking member of the Economic Growth, Tax, and Capital Access Subcommittee, is recognized for 5 minutes.
Ms. Malem, I'm thrilled to say that at the end of 2015, Congress made permanent a program that I'd been championing with my bill, the CREAD Act, for the past 2 Congresses. It's the 504 CDC debt refinancing program that allows small business owners to refinance existing commercial debt with long-term fixed-rate financing so that they can create jobs and boost economic growth. In its trial year of 2012, over 2,700 businesses refinanced nearly $7 billion in old, expensive debt. So it was clearly a very popular program, but then allowed to expire at the end of 2012. Well, I'd like to thank the chair and the ranking member for their support in getting this bill to be in the be in the bill that was passed in 2015, and. So it's my understanding that SBA has begun to craft the regulations for this program. Can you provide an update on these regulations Can you tell us how the process is going, and do you have a timeline for the approval process for the regulation? And how long after the regulation's released do you think small businesses may be able to apply for the program?
I can give you some rough information. We've been working on this with our general counsel and with OMB. We're officially trying to be ready to launch and be able to process refi loans in June, but my goal is to get it done before that. It's just all the steps of getting the rule out. One of the things that we're trying to do this time is to make the process as simple and less complicated. It was very complicated last time. We're trying to simplify it where we can and still meet our regulations. So we're hoping to have it ready for prime time in June, but as I say, my goal is to get it done before that.
That sounds great. Now, what regulations do you anticipate may be different in the permanent program versus the previous temporary program?
I think some of the regs that are different from the old program have to do with some changes that we've made during this last year. We had some look-back provisions. When a company refis its debt, in our old program, we required them to show evidence of debt that might have been 5, 10, 15 years old. Between that old program and now, we have simplified some of those rules already. So we will be implementing that kind of streamlining in the new rules so that it's not so onerous on the borrower to have to show evidence of what the debt was on their books for. That's just one thing that comes to mind. But I would like to respond more carefully to your question, and I would like to go back and ask my team for those details if you'd like me to.
So they will still have to show debt, but the way in which they do it will not be so
if they have debt on their books, we've made it simpler for if they show debt on their tax returns. And I don't want to go into the weeds because I'll get it wrong. But if they show debt on their tax returns, rather than having them to have to dig back and show us the notes and the payment records of loans that are over 2 or 3 years old, we will take the fact that they have debt showing on their tax return and be able to refi that debt without them having to dig for a lot of old paperwork to confirm that that was actually debt that we're refinancing.
I see. That sounds good. And in what form will these regulations be released? Standard operating procedure or interim final or what?
This is one of the things that we're looking at right now. My understanding is there will be a reg to address a couple items, and then we will have to also make our standard operating procedures fit that reg and have the details that we need for processing. That's why it's going to take 4 months to 5 months to get this done.
And will you need additional staffing resources to help with this process and this program?
That would be nice. Right now we're doing it with our existing staff. It's a high priority for the 504 program. One of the things that I did want to add is the 504 program has lagged a little bit in the last few years, and we've focused the last few years on governance of that program to make sure that the CDCs are operating in a healthy manner. This year we're really going to help focus on growing that program, helping market that program, streamlining so that program can grow. It's a great program. I used it as a banker. I had many customers that were able to get into their own real estate because of that program. So in general, we are going to really focus on helping that program grow this year.
Thank you.
Thank you. The gentlelady's time has expired. Gentlelady from California, Ms. Hahn, is recognized for 5 minutes.
Thank you, Chairman Shabbat, for holding this important hearing. It was interesting last week that Administrator Maria Contreras-Sweet testified to this committee. The extremely positive steps that she's taken to make the SBA a more accessible and efficient agency since taking on her role. She reported a record year in small business lending, a record year in investment, a record year in contracting, all with zero taxpayer subsidy needed to sustain this kind of momentum. I applaud her great record of helping the needs of small businesses across this nation. In your testimony, Administrator Malum, you stated that SBA loans to women and minority groups have increased by 20% each year. under her leadership, and we find an even more impressive number achieved when it comes to loans to veterans, an increase of 103%. This is great for Los Angeles County, where we come from. It has more women-owned businesses than any other county in the country, and where 55% of businesses are minority-owned. These statistics show that SBA is moving in the right direction, even under the oppressive sequestration. But we know that there's more work to do. And what I wanted to ask you, Ms. Mellum, is one of the things that you stated was that roughly 1/3 of our nation's banks actively participate in SBA's lending programs. This is despite SBA working to recruit more lenders since 2014. In my district, there are dozens of different banks that businesses turn to for their banking needs. And many businesses have special relationships with their bank of choice and have a history of being long, loyal customers. So if only 1/3 of the banks are participating with SBA, then a majority of the businesses are likely banking with an institution that does not work in a lending partnership with SBA. So why do you think there's only a 1/3 of banks are participating? What are you doing to increase that? And how do credit unions, how are they a part of this scenario?
Okay, so well, I really appreciate that question. Again, as a former banker, I thought that having the SBA guarantee, tool in my toolbox was always a phenomenal way to help a customer that I just couldn't quite underwrite with depositors' dollars. And really, the SBA guarantee loan programs epitomize to me the best of public and private partnerships, because here we have lenders, regulated lenders in the field making loans, and the SBA just steps in to guarantee for the weakest of credits, the weakest of borrowers, and zero subsidy. So it's a fantastic program. One of the problems over time is it can happen in federal government is that the program became harder and harder to implement. Chairman Shabbat has pointed out he gets most of the complaints because it takes so long to get a loan guarantee approval, which is the problem that we're working to solve with automation, technology, and streamlining and simplifying our procedures. And the other thing that we have to do is we just have to get out to those banks and market to them and show them how SBA has changed and grown and improved. But you're absolutely right. We have a lot of opportunity by bringing back and bringing in more lenders. We do have initiatives with credit unions right now. We are working with credit unions, especially those that do business lending, and we have increased participation among credit unions as well.
Well, I appreciate that, and that was really the nature of the only thing I really wanted to ask you. And it's so interesting that from the time I've been on this committee, it's sort of the number one issue with our small businesses is not really any oppressive regulations or the other things that we might think are holding them back. It's access to capital. Many of them want to get even a small or medium-sized loan, and we know that when they get that loan, they will expand and they will hire, and I've seen that replicated many times in my own district. So we just need to get more banks, with the program and show them that it's, something positive for, our economy. And, really one of the regrets, I think I wasn't here for the bailout of our banks, but I think one of the regrets is that, in exchange for that, taxpayer bailout, that we didn't put a little more requirement or obligation on their end to get back and lend those dollars back to particularly the small businesses in this country who we know are really the backbone of this economy. So thank you. And we think you're going in the right direction, but we want you to get more banks with the program.
So do we.
Thank you. The gentlelady's time has expired. I would just note I certainly agree with the gentlelady from California's comment about the access to capital is a big problem. But I personally have heard lots and lots of examples of overregulation being a serious concern of small businesses across the nation too. So But I would just note that for the record. And the gentlelady from New York, Ms. Meng, who is the ranking member of the Agriculture, Energy, and Trade Subcommittee, is recognized for 5 minutes.
Thank you, Mr. Chairman, and thank you to our witnesses for being here today. I just want to piggyback a little bit off of what Ms. Mellum's response to Congresswoman Hahn about the recent changes to the Office of Capital Access. And last week's hearings, we discussed a lot about the continuity at the agency during administrative transitions. Can you explain how these offices have been set up or are improving in handling these transitions?
Well, thank you for that question. It just so happens that our administrator has already begun a process at the SBA. In fact, we had a retreat last Friday to work with our career as well as our appointed leaders to ensure that there can be a smooth transition and that initiatives underway will continue. And I can tell you that in the Office of Capital Access, we have a wonderful team of executives, including Linda Rushi, who's been with the agency for I won't tell how many years, who know this program, and given the right leadership from this committee and the right resources, will continue to run these programs effectively and positively for the taxpayer as well.
Thank you. Many businesses in my district have been able to avail themselves of 7A and 504 loans, which are critical sources of support for entrepreneurs. Despite the fact that many entrepreneurs are also immigrants, I hear that these minority-owned businesses often struggle to find the resources they need. And last week, the administrator did talk about improvements that have been made, and I commend all of you for that. What more can the Office of Capital Access do to ensure that you're reaching out to more and more entrepreneurs throughout all of our districts?
Well, this is a main objective and initiative, and we talk about it everywhere. We work with our trade partners. As you know, we have a real strong association with NAGL. They have a committee that helps on working with us to reach underserved markets, to find those borrowers that don't normally have access to capital. We're doing it with pricing, as I mentioned, by keeping the small dollar loans less expensive. We're doing it with outreach and communication. We're doing it in the Community Advantage Program by requiring that 60% of those loans go to underserved markets. And we're also, working very hard on our microloan program, which is the starting point for all borrowers and is having a major impact on underserved market lending. So we're working basically on several fronts, but it's top of mind, and we track it, and we follow it, and we talk about it. We look at numbers every single month. We talk about it at conferences. We talk about it in our training, and it's an important focus of the Office of Capital Access.
Thank you. I yield back.
Thank you. The gentlelady yields back. The gentleman from New Jersey, Mr. Payne, is recognized for 5 minutes.
Thank you, Mr. Chairman. Let's see, Ms. Mellon, when I visit small businesses in my district, by far one of the most heard concerns naturally is the barriers to access to capital, and particularly accessing smaller dollar loans. While in 6 and 10 SBA loans are for $150,000 or less, this is still below the benchmark set in 2007, and this deficiency remains unchanged year after year. What steps is SBA taking to increase loans for businesses that need them the most, and specifically loans under $150,000?
So that's the issue that I'm trying to articulate, that we are emphasizing very much making those loans. We have reduced fees on small dollar loans. We have initiatives with our Veterans Business Development Group to ensure that we're reaching veterans groups. We have a special office in the SBA that helps us reach women's groups. And in the Office of Capital Access, we have the Office of Economic Opportunity, which is is our director there, Grady Hedgesbeth. Basically, his team focuses full-time on ensuring that our loan products, all of them, 7A, 504, Community Advantage, and microloans, are reaching into the underserved markets. It's a challenge. We have work to do. We're making good progress. It's been a priority of our administrator, and it's been my priority. And we're going to see growth again next year. And if you can help us figure out how to do it better, we're definitely open for suggestions. But it's a priority, and we're trying to hit it on various fronts.
But the information that I received in terms of preparing for this hearing is since 2007, there hasn't been much change.
Well, you're talking about the percentages of those loans, but one of the things that's happened since 2007 is somewhere in there the maximum loan size has gone up. I think it went up from 2.5 million to 5 million. Was it 2010? I wasn't with the SBA then, and I don't recall exactly, but just by the very nature that we now do loans between 2.5 million and 5 million, I think it skews those statistics that you're looking at. For us, we made 22% more loans in 2015 than we did in 2014 in the size category of 150 and below.
Okay. Since you brought it up, I'll ask this question. In the last year's budget justification, SBA stated it would continue implementing revised 504 regulations, but did not provide any details. What steps is the SBA taking to address these problems in the 504 CDC program?
Could you be a little more specific? You're asking about 504 regulations that we did not implement?
Right. It stated in the justification that you would continue implementing revised 504 regulations, but you were not. There was not detail.
Okay, so I know that this last year we implemented a number of 504 regulations, most of them having to do with governance of CDCs. They were in effect in April of 15.
We published in 14.
Published in 14. I'm looking to my expert here. And we have implemented a number of 504 governance regulations since we last testified. Is that what you're referring to? I'm sorry, I'm not quite catching your question.
Yeah. Well, you're familiar with the year's budget justification,
right?
That you do that, right? And so in it, you stated that you would continue to implementing revised 504 regulations. Obviously, there are issues with the program, correct?
Yes, I mean, we have issues everywhere, everybody. We have issues. We're working on our issues all the time.
Right.
Yes, we did this last year, do a number of implementing 504 regulations.
Okay, well, obviously there's still an issue about getting clarification and some specificity in what those changes are, because you're still having a problem right now being specific about it. But we would hope that you would continue to work towards working on those issues, and I'll yield back.
Okay. The gentleman yields back. I'd like to thank you both for participating in the hearing here this morning. The government has long recognized the need to aid entrepreneurs and small businesses across the nation so that they have access to capital necessary to create jobs, and that's the principal thing I think the SBA does, is the loan programs, the guarantees that you're responsible for. And as you know, the GAO report released recently informed this committee that there are still some significant mismanagement issues at the SBA. For example, they had made 69 recommendations, and of those, only 7 had been implemented, and a lot of the committee members were quite concerned about that last week, and we urged rapid improvement on those recommendations that hadn't yet been implemented. So there's obviously still considerable room for improvement. This committee would urge you to take action on these items because after all, the principal purpose of the SBA and the oversight responsibilities of this committee is to make sure that we're serving the small businesses all across this country. So please work very hard at this, and we'll keep an eye on you. So thank you very much for your testimony here this morning. I'd ask unanimous consent that members have 5 legislative days to submit statements and supporting materials for the record. And if there's no further business to come before the committee, we're adjourned. Thank you very much.